Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Tuesday market webcast. Okay, daily chart. Look, lower band ride. It was doing that when we spoke yesterday. They bounced it. They traded as low as 42.13 quarter. So it's starting to get down into that, potentially sub 4,200 area where really it's got to go back and test this consolidation area from the spring. Bulls bounced it, which you would expect. There's going to be bounces. It's how do the bears deal with those bounces? And then, as far as each of us is concerned, it's how do we deal, or how do the with the bounces? I have said consistently, you can buy it, you can stand aside. Don't fight it short. Yesterday was your classic day where the market just dangled some shiny stuff right in front of you down there as it got into, the 42.20s, into the 42 teen area, and certainly caught people over the tips of their skis. Bounced it, and then your choice is you can reverse yourself. You can go with the flow and take advantage to the long side. You can step out of it, and you can wait it out, complain about why it's going up, whatever, like people do. Twitter's a good avenue for that. Or you can be a moron, which means you can be short, stay short, add to your loser, and keep adding and adding and adding. Wake up in the morning, trading 42.60 wherever we are, 65 half, wondering what the hell happened. Well, it's pretty simple what happened. You got ideological, you got dug in, and then you got your ass kicked. Don't do that. These bounces are going to happen. Get the hell out of the way, or take advantage of them. Wait for them to, wait for them to come in. So this is really going to be now about where does this come in. So here's the hourly chart. You got the new weekly pivot up at 43.0375. And these are hourly candles, so it's been a grind. It's been an absolute grind. This is not, these are, the volatility overnight has been basically non-existent. So the bands are tight. I would expect more chop, whip, double-sidedness off the open this morning. And then it's really going to be, does that middle band continue to hold? And if it does, are we going to go after these highs up in the 42.80 area? So look, if you got caught down here and you added all the way up here, that's not a pleasant, 3 or 4 hours of your life at all. And it would be a hell of a lot easier if you just accepted the fact that this thing is not going to go off a cliff. It hasn't yet. And that bounces are going to happen. And if the bears do their job, those bounces are going to get sold to lower lows. Bounce, lower low. Sad little bounce, lower low. Flat, down, bounce. I don't know. Maybe this is different. Maybe it's not. It's probably not. The question is, where are they going to defend it? It would have been better if they would have defended it last night and we were more down here than we are up here. So you've got to respect that as a trader and understand what's going on. So look, hourly mid, if it holds, then they probably go back after these highs. If they convert 42.80, then you're going to get back up into 4,300 and back into the weekly pivot. Does that mean the tape is bullish? No. It means bounces happen. People take profits. There are short covering rallies. You can't take the bulls seriously beyond a trade until you get something on a closing basis above the green line here, which is the daily mid-band. If they can't do that, then fine, be long, take profits. When it stops working, roll it up and punch out. That's all. But stop anticipating where it's going to stop. Wait for it to actually stop. So look, let's say you were patient and you waited for it to stop and you got short. We did, but what happened with us is came in, and we ended up getting stopped out overnight. So, on this lift back through, that's fine. Getting stopped out even after taking some profit is not a big deal. Getting short, when you're putting in lower highs is not a big deal. That's when you take a shot. And if you don't do well, that's fine. It's the cost of doing business. But the shorts that are happening while it's doing this, that's just take the money, wad it up in your hand, go out to your grill, throw it on the grill, and just start that sucker up. Just do that. It's quicker. It's the same process. You can't fight these rallies. Let them be. Pick your spots. Volume weighted average price, 42.57 and change. Hourly mid, 56. Proprietary moving average is 63. We're trading 65.75 right now. So 56 to 63 is certainly an area that's about to get fought over big time off the open. Bears need to immediately get back below 58. They've had a couple of spike lows, one at 58 just before 6:30. There's another spike low, 60 and change, like right around 8:15. They need to, when they ring the bell, they need to do something to demonstrate to everybody that they're here today, that they aren't going to take the day off. If they do that, then pushing back into the 46 area at some time over the course of the morning, not a big deal. All right. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. I'll talk to you after the close. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.